So welcome everyone. We are really glad to have you here today. We have a new webinar, and this session today will be in English, and we're having today María Irigoyen. She will be joining us today to talk a little bit and teach us about ESG and how to implement it in our funds and in your companies. This is a topic that's super important for us. In both communities, in WeInvest and in Emprendedora LAC, many LPs and VCs and everyone that's involved in the industry is asking every day more and more about this subject. And especially, for example, ourselves in WeInvest, we have it as in our dashboard. It's a ratio that we're actually measuring. So at this moment, 80% of our members are implementing policies regarding ESG. We would like it to be 100%, but we know there's progress to be made. So let me introduce you formally to María Irigoyen. She's partner at Sustenia, an Argentinian-based consulting company. She has studied a master's in UK in international development and a postgraduate in sustainability leadership. Maria, thank you very much for joining us today, and please, it's all yours.
Thank you, Barbara, and good morning, everyone. It's a pleasure to be sharing this morning with this community. So I'm going to share my screen. See. Can you see it well? Yes? It's okay?
Yeah.
Okay, so as I said to Barbara, we're going to leave space at the end so we can have questions and comments. And if I'm going too fast or if something is not clear, please just raise your hands and Barbara would let me know and we can pause at any time. So thank you for the invitation.
Also, Maria, sorry,
yes.
If anyone wants thinks that they will forget the questions, maybe you can leave them in the chat section and afterwards we read it at the end. Thank you.
Yes, certainly. So as Barbara well presented, the idea for today is to talk about ESG. We have prepared a presentation regarding the context, the wider international development context for business and entrepreneurs and investors as well. And then we're going to focus more specifically on the concept of ESG and what are many of these new standards and tools that we can use either as in our own companies or in our investing firms to understand this criteria and see how it can help us have a more comprehensive company management and investment. So to begin, this is a very visual image of what we call an era of disruption. We are still seeing the significant effects in poverty rise and inequality that COVID-19 left us with the world recession. As you are probably following the climate talks, the current climate talks in Egypt, we are seeing a world where we have more climate adverse events and catastrophes, and scientists are alarming on the increasing rate of biodiversity loss that we haven't seen this in recent history as in such a significant way as we see today. And of course, the multidimensional impact of war, which will have an impact across the world on economic, social, and environmental issues. And to summarize, the World Economic Forum every year carries out a mapping of risk. And as you can see in this chart, on a global scale, over the next 10 years, we can see that 8 out of the 10 risk that the World Economic Forum is mapping have to do with social and environmental issues, right? So this is how significant we are looking at environmental, social, and governance issues in the coming years. If we look at some of the current trends, when we talk about sustainability and we look at the sustainable development context in particular in relation to the corporate sector, we can see many of these concepts that I'm sure you're probably reading and hearing about, right? So, for example, if we look at some of them in a bit more detail, the valuation of human capital as we pass the second anniversary of COVID-19's emergence, the pandemic continues to influence changes in the workplace, right? As most of you probably are seeing, There's more remote and flexible working conditions and a greater focus on employee well-being and corporate purpose. So we can see this trend that gained more ground during the pandemic beginning to stick and to continue to influence the workplace in the future. Of course, there is also an increased public awareness of climate change and more social unrest regarding this issue that can be reflected in climate protests worldwide. And in a recent survey that carried out GlobeScan across 17 markets, it was found that climate change concern is the highest level since 1998. Of course, another key issue is building sustainable and resilient supply chains. To give you a bit more information, in the consumer goods sectors, for example, supply chains are responsible for 90% of a company's overall environmental impact. And in this context, there's more focus on sustainable consumption and production systems. In this resource-constrained world, there is more focus on promoting circular economy, of increasing supply chain and resiliency in order to respond to this increase in market volatility. Of course, technology plays a key role in all of this, and we're beginning to see technology step into the world of ESG and sustainability, including regarding the analysis of data, right? There are increasingly more digital tools that are being used to help sense of all of this sustainability data that we have and that can help us assess a company's performance. So this is a bit of the context. I'm going to talk about more about ESG integration in the following slides, but it's also important to understand that we are also seeing an increasing trend in regulation regarding ESG issues. And we can see that in the coming years, business will increasingly be more confronted by sustainability-focused regulations and standards, right? So this is something that we will see being demanded by different stakeholder groups. So let's do a double click on the environmental agenda, which is the main focus is the climate agenda. As most of you are probably following, right now as we speak, we have the COP27 meetings being carried out in Egypt. The COP stands for Conference of the Parties. As you can see here, this is the decision-making body responsible for monitoring and reviewing the implementation of the United Nations Framework Convention on Climate Change. Most people, as you're aware, in Paris in 2015, when in the same year that the United Nations launched the SDGs agenda with the 17 SDGs, the Paris Agreement was also signed, and this was the first international climate agreement in which more than 190 countries agreed on the following objectives that you can see on screen, which is to limit the global temperature increase in this century to 2 degrees Celsius while pursuing efforts to limit this increase even furthermore to 1.5 degrees above pre-industrial temperatures. And for this to happen, the countries that are part of this agreement have to periodically review their commitments and try to make greater commitments on reducing their emissions. And of course, there are many issues involved. There's also the issue of providing finance to developing countries to mitigate climate change and strengthen initiatives for resilience and adaptation. As we can see in this data over here, we have a long way to go to meet these objectives in order to be carbon neutral by 2050. According to the UN Intergovernmental Panel on Climate Change, we need 43% reduction in emissions by 2030 in order to be aligned to this target set by the Paris Agreement. And so in this new climate talks, the COP27, it's the 27th meeting of the Convention on Climate Change. There's there's renewed commitment and focus on reducing greenhouse gas emissions, building resiliency, and adapting to inevitable climate change. As we say, we are already living the effects of climate change, so there's a very big focus on adaptation and also on finance climate action in developing countries. The last COP, which was carried out in Glasgow last year, left mixed feelings regarding progress. This was a COP that was carried out after in 2020 due to COVID-19, the COP had to be suspended. And so in 2021, COP26 had very big expectations. And according to many analysts, we didn't achieve the required commitments in order to be on track to meet the Paris objectives, right? And if we look at the social agenda to do a more specific focus on social issues, you can see all these topics here on screen, which are at the center of this agenda: human rights, health, diversity and inclusion, cybersecurity, new consumption models, local development, and equal opportunities are some of the key issues that we are seeing in this social agenda, where well-being is also a very big focus post COVID-19. So in this context, we say that sustainability is in constant evolution, right? If we look in particular at LATAM, the Latin American region, and with the experience I have here in Argentina and many other countries, many years ago, the concept that was most known was that of social responsibilities of companies not being able to thrive in context of extreme poverty, right? And so this led to many initiatives and community contributions. And as time evolved, this concept also evolved, and companies started to understand that it's not only about giving back to the community, but about being responsible in every aspect of business, right? So we started hearing more the concept of corporate responsibility, or CSR as well, in which the focus was on all company stakeholders of employees, suppliers, your impact on the environment. And as this evolved over time, we started talking about the triple performance: economic, social, and environmental issues. And today we're seeing that leading companies are using this concept and this sustainability strategy and management as a platform for growth, right? And they're seeing in the Sustainable Development Goals opportunities for understanding what are the main concerns and the main challenges ahead, and providing through products and services response to these challenges. And so being able to grow and understand what the world in the future is going to need from these companies. So as this has evolved over time, so has business performance measurement evolved as well, right? So here we can see the classic key performance indicators that for so many years we talked about, right? Sales, number of clients, cost savings, productivity. And today we're seeing a new set of key performance indicators that have to do with all these other impacts and key issues for companies, right? Talent retention, customer experience, resolution of claims by surrounding communities, emission reductions, reputation. All of these are the new key performance indicators that companies are beginning to evaluate, and stakeholders are also using to assess the performance of a given company. And so we reach what we begin to call this ESG era, right? This era in which this concept of sustainability has taken a very big interest by the capital markets and by investors looking to understand, looking to assess a company's value, not only focusing on economic and financial performance, but with a much wider lens where environmental, social, and governance issues are key, right? So what are the ESGs? We hear it all the time in the news and specialized publications. Well, this is a concept for performance management and measurement. It's aligned to sustainability. It's a concept that looks at these three key issues when assessing a company's performance. It improves in comprehensive risk management, and it's a framework that many standards are using in order to develop indicators and guidance for reporting on an organization's performance, right? So we're trying to see this concept as a way of helping companies continue to generate competitive value and to be positively recognized by all their stakeholders, including their shareholders and potential investors. So let's look at, if we go back to the social agenda that we just presented, let's look at some examples of social key performance indicators, right? So we're looking at indicators that are showing percentage of women in managerial positions. When we talk about employee health and well-being, there are companies which are looking at generating burnout index. There's also indicators regarding customer experience, percentage of social investment as part of sales, percentage of local suppliers. All of these are specific indicators that companies are starting to measure and develop in order to show their key performance regarding ESG issues, right? And if we look at the environmental agenda, there's also many targets and key performance indicators such as emissions reductions, targets to become net zero by 2050, increase of share of renewable energy in a company's energy matrix, improvement of energy efficiency, goals to send zero waste to landfill, calculating the water footprint, and increasing recycling and reducing waste with this concept of circular economy where we take, make, and constantly try to reuse. So these are a few examples that show that the new key performance indicators that companies are developing in order to show their performance regarding ESG. And there's also a very big interest that is being taken on this issue from the stock markets. The United Nations, when they launched the 17 SDGs, as part of the SDG number 12 of responsible consumption and production, there was a specific initiative that was created, which is called the Sustainable Stock Exchanges Initiative. And so this is a global platform to improve ESG performance and accountability and promote sustainable investment. So in the last years, we've seen that 64 out of the 116 stock exchanges, which are currently being monitored by this United Nations initiative, have published ESG reporting guidance for their listed companies, right? So this is a very interesting piece of information because the ESG movement is being promoted from a different organization and company stakeholders. Among these guidelines, which are being published by these different stock exchanges, the most widely used and recommended framework so far has to do with the GRI, which we're going to present, with SASB, integrated reporting, and the Carbon Disclosure Project as well. And there's also here, I'm also showing here an example of, for example, the New York Stock Exchange ESG guidance. As part of this guidance, in step number 5, they urge companies to integrate ESG into their business strategy. And the U.S. Securities and Exchange Commission is also currently working on new disclosure rules on climate change. So when these rules are ready, they are calculating that this will be ready by 2024, companies will have to report on the risks and material impacts that they have on climate change, their strategy, their governance, and any goals and metrics that they're measuring regarding their impact on climate change. And we also have here a couple of data regarding how ESG-oriented investing is experiencing a significant increase. Here we have some data for you. This shows basically that the rising profile of ESG has also been evident in the last couple of years in investments. Even while the rate of new investment has been shown to be falling, inflows into sustainable funds, for example, according to some recent data, have risen from 5 billion in 2018 to more than 50 billion in 2020, according to some of the data that we are following, right? And we have some other examples here, but long-term performance of 745 European-based sustainable funds shows that the majority have done better than non-ESG funds over 1, 3, 5, and including 10 years, right? So in medium and long-term performance has been better for funds, including ESG criteria. And here are a couple of other examples that we can show to see how sustainable bonds are increasing 20-fold since 2015 and represent 10% of global debt markets. And sustainability-linked loans have jumped 300% to more than 700 million in the last couple of years, right? And also there's a lot of focus on ESG financing linked to the Sustainable Development Goals, right? And as part of some of the analysis that we are looking at, the most funded UN Sustainable Development Goals were very much linked to green projects, right? To projects that have to do with climate action, affordable and clean energy, and sustainable cities and communities. So as part of this worldwide interest and urgency and call for action on climate change, we can also see that investment markets are also aligned to this trend, and they are there's increasing fund associated to these types of bonds. And so in which ways is ESG creating value, right? So we've seen the context, we've seen some of the trends and the data and the concepts and the social and the environmental agenda. So why is it important to manage and report ESG performance, right? So if we have to do a little summary of ESG benefits, this is what we came up with, right? To begin with, it's to manage risk and opportunity, right? So as we saw at the beginning of the presentation, that when global organizations are mapping risk, the key risk for the next couple of years are going to be social and environmental risks. So companies and investors need to evaluate, assess, and create strategies to respond to these risks, which are increasingly social, environmental, and even governance-related risk, right? And in this sense, the other benefits is to attract and retain investors, to improve access to credit, because we, as a company, we can be better prepared to respond to this required information. And also access new markets. We can see global markets increasingly requiring this type of information. A better performance on ESG issues can also lead to efficiency improvement and cost reduction, increased reputation and recognition by markets and stakeholders. And a very important driver also has to do with anticipating future regulatory requirements, right? We see that many of these trends in the long run tend to be regulated. So companies are becoming prepared to respond to this increase in regulatory requirements. And in summary, it's a way to respond to expectations and requests for information from all different stakeholders, right? They can be employees thinking about the new generations, the Z generation, which has more sustainability conscience and interest. They can be investors, they can be regulatory entities, markets, clients, communities. There's increasing expectations regarding these issues, and companies who manage and report on this type of performance can be better prepared to respond also to all stakeholder expectations. And we can see also this chart over here, which looks at the MSCI index for emerging markets. We can see in orange the performance of a given group of companies from emerging markets. And in blue, we can see a performance of a subgroup of ESG leaders from this market. So this chart is showing how there's increased measurement and there's increased proof of better performance in the medium and the long term for companies which are incorporating ESG to their strategies and reporting. So we also, I think this is more specific and concrete information regarding how ESG creates value. This is the sources right here. This is from McKinsey, and they talk about that how it's important to understand why these criteria link to value creation, right? This is not always so clear to understand. So they ask themselves, how exactly does a strong ESG proposition make financial sense, right? And from their experience and research, they came up with this information, which is summarized in this chart. that shows us ESG links to cash flow in 5 important ways. And you can see it here in this chart, right? They talk about top line growth, cost reductions, regulatory and legal interventions, productivity uplift, investment, and asset optimization, right? And so they, for all these 5 key ways in which ESG creates value, they look at differences between a strong ESG proposition and a weak ESG proposition. And this is very much related to the benefits which I showed in the previous slide, which were a bit more general. This makes it more specific to have more compelling arguments. So why invest in ESG? Well, if we take a standpoint from the investor's perspective, we can, again, repeating a bit of what we just talked about, we can see that we can have a more comprehensive outlook of existing or potential risks when we look at ESG performance of a company. We can begin to select companies that comply with regulations or international standards. We can strive to search for long-term profitability for companies who in the long run will outperform their peers because they have a more comprehensive understanding of what the world is going to look like in the next couple of years. Of course, it's a way of mitigating environmental and social impacts, focusing on transparency and company governance, being able to invest in companies that have accountability to a wide range of stakeholders, and also being able to identify those ESG leaders that are not only complying, managing risks, anticipating compliance with possible regulations, but those leaders who are also analyzing and looking for those opportunities which are linked to a sustainable development agenda. So now let's look at disclosure requirements, right? So we've looked at the trends, the context, the concept of ESG, the argument why we should manage and report ESG, and why it can be a competitive advantage to invest in ESG. Now let's do a brief review of current disclosure requirements and standards that can be used. So there's a very complex landscape of rating indexes, standards that we're going to sort through in a couple of minutes. But if we can sort of organize this landscape, we can see ratings, which measure the resistance of a company to environmental, social, and governance risk. We can see rankings that rank companies based on their ESG performance. We can see indexes, sustainable indexes, that these are stock exchange practices that measure the performance of securities that meet ESG criteria. And we have a whole set of standards, international guidelines, which measure indicators focused on triple performance, right? So all of these are based on public information. The standards help companies provide public information according to transparency guidelines that will be used by raters, by rankings, and by the sustainability indexes or ESG indexes. So looking at this comprehensive approach where we can see all key issues that ESG looks into. We've revised many of these. If we do a double click on governance, which we haven't talked about so much, we can see key issues such as transparency, anti-bribery and corruption, corporate governance, and risk management. We can see that ESG integration practice remains complex and challenging, right? And one of the main barriers has been a lack of consistent quality and comprehensive data on ESG. So having said that, let's look at the current landscape regarding all these issues, right? So I'm going to go through this, making it as simple as possible. This is by no means 100% comprehensive. There are also other standards out there, but this is a brief summary of key frameworks and standards which are currently being used, right? So if we start from the top, principles and frameworks, well, the United Nations, through the Sustainable Development Goals, has created a key agenda for ESG. These are the key topics that governments worldwide have agreed on that are the main challenges for sustainable development, the main challenges on environmental, social, and governance issues, right? And also the United Nations has created specific principles and frameworks for particular subjects that you can see here. There's a lot of focus on the financing industry. We have principles for responsible investment, principles for responsible banking. There are also initiatives regarding women's empowerment. And previous to all of this, you must probably have heard of the UN Global the UN Global Compact, which set out 10 principles for guaranteeing human rights, human and labor rights, environmental protection, and anti-corruption in the workplace. So we have all these principles. We have then disclosure standards, which I'm going to look into in the next slide. We have many reporting organizations. They can be companies, they can be small and medium enterprises, they can be civil society organizations, even governmental organizations can do reports showing their ESG performance. We have many assurance providers for these reports. They can be the big four that you can see here, and they can also be other smaller assurance providers, which are basically auditing these reports, and they're providing certain assurance that the information is transparent and complies with the principles set out in these standards. And there are a lot of organizations, a lot of consultants that provide sustainability or ESG ratings, as you can see here. And we're going to look at some examples. There are also sustainability indexes, certifications that you can see here, that we're going to also look at, for example, B Corp certifications. And there's a whole range of information users. Who is using this information? The investor community, clients, other users, commercial partners, public entities, and other stakeholders. If we do a double click on disclosure standards regarding ESG, we can see also complex frameworks, complex landscape of disclosure standards. We like to say that this ecosystem or sustainability disclosure context, it's becoming a little bit more complex before it starts to simplify itself. All these frameworks take the common agenda set by the SDGs, and in this agenda they set key topics. They identify key topics in order for companies to manage and measure their ESG performance. Investors and stakeholders need this quality information for decision making. And so we see a gradual synergy between all these existing frameworks, right? So if we look from a financial point of view, we have the International Financial Reporting Standards, which recently began to work aligned to other existing initiatives, such as the SASB standards and the Integrated Reporting Framework. I'm going to look into those in the next couple of slides. And I'm going to show you how there is increased synergy to create a more common standard. We're also going to look at GRI, which is a framework for reporting on sustainability information. And there's also specific focus on climate change disclosures that you can see here. So in the next couple of minutes that we have, I'm going to briefly look at some of these standards. And of course, at the end, I am open for specific questions regarding any of this. So the starting point is that what is not measured cannot be improved, cannot be managed and improved. And so that's why we put a lot of focus on seeing how we can actually begin to measure and report ESG, right? So if we look at some examples of ratings, right? What are the ratings evaluating? What type of performance are they looking for in companies, right? This is the example of the Fitch Ratings. This is a rating agency which prepares timely and prospective credit opinions for the credit markets. It has a local, the Fitch is the local affiliate of Fitch Ratings in Argentina, Paraguay, and Uruguay. And you can see here what ESG information it is evaluating for different companies that are rated by this rating agency. So if you look at environmental issues, they are looking at initiatives to preserve the environment, certifications, the company's impact on the environment, how they're working with its commitments throughout the whole value chain, if they have green bonds or loans, if they have any fines, and what their future plans are. On social issues, they're looking at community investment, working conditions, professional development, non-discrimination at work, human rights, providing quality service and guaranteeing customer satisfaction, how they deal with complaints about products, corruption, and other issues. And regarding the G of ESG, we can see that they are evaluating and rating companies' performance, taking into account board composition, their independence, diversity of the board of directors. They have audit committees, management information systems, transparency guidelines, risk associated and how they manage risk associated with data and transactions, and other issues that you can see here, right? Another example is Sustainalytics. This is also a rating agency which is working here in Argentina as well. It's a global rating energy agency, but we see that they're working here with some of our clients. And what they do is that the ESG risk captures an issuer's exposure to material industry-specific ESG risk, right? And so what they want to do is they want to provide investors with an overall score based on an assessment of how much of a company's exposure to risk is unmanaged, right? So in this chart over here, they particularly focus on this 6th point, which is unmanaged risk, right? And so these are some of the informations that they're looking at. They do research and they look at a company's performance through their corporate publications and regulatory filings, news and other media, NGO reports and websites, multi-sector information sources, company comments, among others. Another example is EcoVadis. Companies are rated according to their performance in policies, actions, and the results, as well as the contributions of third parties and interested parties. And here you can see again what ESG topics they're rating companies on, right? So they're looking at ethics, environment, labor, and human rights, and they have a specific focus also on sustainable procurement, trying to see if these ESG criteria is also managed throughout a company's supply chain. Another example is MSCI. This is pretty interesting to look at because they have an interactive map of ESG materiality by industry. What this means is that they identified ESG issues which are applicable to all industries, and then they look at the specific issues per industry, right? So they measure a company's resilience to significant industry, long-term environmental, social, and governance risk, right? And for example, here in the chart that I'm showing you here, we can see that there are a couple of issues which are marked with this line, which are a key issue selected for the soft drinks industry, for example, and they have this for different industries. So if you want to know what key issues are relevant for your industry, you can go into MSCI and download the materiality that they have carried out by industry. And now let's look at some reporting standards, right? The previous ones were examples of what existing ratings are looking at. Now I'm going to focus a bit on reporting standards. GRI was the first reporting standard that published guidelines in 1997. They are a multi-stakeholder organization. Most of you have probably heard of GRI, and it's the most widely accepted framework so far. It's the one that has been in place for the most number of years. They are applicable to all types of organizations regardless of their size, their sector, or geographic location. They translate the guidelines into 16 languages, and they periodically review their guidelines to make sure they're up to date with current other standards and current sustainability context, right? So GRI has a focus on all stakeholder groups. It provides transparent information for all company stakeholders. And in order to do this, first, a company must carry out a materiality analysis. In this chart, you can see that GRI proposes a modular set of standards. There in green, you can see the universal standards, which provide the requirements and principles for using GRI. Then they also have another standard that provides the disclosures that all companies or organizations must report on, which are applicable to all types of organizations. And the GRI 3 is a specific standard for carrying out a materiality analysis, including stakeholder participation, and for a company to be able to say, I have analyzed my sustainability development context, my impacts on the economy, on society and the environment. I have considered my stakeholders' expectation, and I have identified a set of key material issues for my company. And once you have identified all of this, you can report specific topic standards. And also GRI is in the process of creating specific sector standards. So they're saying that there are industries which have specific topics that must be disclosed on. And so they are creating specific sector standards that companies can choose to be able to report on their material impacts. The SASB standards was founded in 2011, and they have a focus on reporting on ESG issues. So they want to help organizations, help companies around the world to identify, manage, and report on the sustainable issues that matters most to investors. So SASB also carries out a materiality analysis, and they have developed 77 specific industry standards developed, right? You can see here in the chart an example of one of their standards. And the focus, we saw that GRI has a focus, multi-stakeholder focus. The focus of SASB is providing information for investors because they look at sustainability from a financial and operational point of view, from the impacts that they can have on the financial performance of a company. And also we can see another framework is the integrated reporting framework. The idea is that a company should not have a business strategy and a different sustainability or ESG strategy. A company in the long term, in the medium term, or in the future should have a sustainable business strategy.
Pobre María está con un poco de tos. Well, we can wait for her for a second. If anyone has any questions, I have 2 questions that they've made me through the chat. If anyone wants to write any other questions, we can afterwards read them to Maria and ask her to answer them.
Sorry, I'm back now. I'm recovering from a cold, so I have a bit of a cough. But so
glad you're back.
Here I am. So to continue with this, the integrated reporting framework provides a framework for companies who want to produce an integrated report, which includes their financial and economic performance together with ESG performance as well, right? And so all of these frameworks are being unified through this new standard, which hopes to unify the market, which is the International Sustainability Standards Board. Was created also very recently last year within the International Financial Reporting Standards Foundation. And the objective is to take all these standards that provide valuable ESG information for investors and deliver a comprehensive global baseline of sustainability-related disclosure standards to provide investors and other capital market participants with information about companies' sustainability-related risk and opportunities, right? To help them make informed decisions. So currently the ISSB that you can see here, and you can see how they are relating to all different current standards which are in place. They're currently developing a prototype of general requirements for the disclosure of sustainability information. And more specific focus on climate-related disclosures. Let's do a double click on that. There are specific standards for reporting on climate issues, as we can see from the urgency to the urgency of the needed climate action that we need. And all these different standards that you can see here, they provide recommendations in order to report on climate-related risk. The CDP is the Carbon Disclosure Project, which has specific information requirements regarding climate change, water security, and deforestation. The Task Force, the Climate-Related Financial Disclosures, TCFD, provides recommendations for disclosing on climate action with a focus on investors. The idea is to improve investors' understanding of the impact of climate risk on different corporations and reduce the risk of a systemic financial shock to the economy due to climate change. So companies who are using the TCFD standard, what they need to report on is how they are including climate issues on their governance, on their risk analysis, and what metrics they're measuring and how they are setting targets in order to reduce emissions and to be on track for carbon neutrality. And in order to do this, there's another specific initiative, which is called the Science-Based Targets. And they're helping companies worldwide to set targets based on science. And they're considered to be based on science, these targets, if they're in line with the Paris Agreement, right? So they're helping companies evaluate their targets so as they can, from their own corporate strategies, contribute to the objectives that are set out in the Paris Agreement. And to start closing this presentation, we can also talk about, there are not many existing certifications, but there is a B-Lab, which is a non-profit organization that certifies companies and organizations that have a business model with a view on triple performance. In Sustenia, we are a B Corp, we are certified. And there are 4 elements to becoming a B certified company. The one is that these companies need to have a purpose. They need to be motivated to create a positive impact on society and the environment. There's a legal requirement because you need to be constituted as an organization that has a focus not only on your shareholders, but on creating value for all company or organization stakeholders. Companies are certified and they're evaluated and commit to improve management and transparency. You must certify periodically to make sure that you are on track and you are improving your performance. And also, this is creating a community, an interdependence. There's an increasing community in LATAM and in the rest of the world of these companies which are working with a common purpose of contributing to sustainable development. So to start to close this presentation and leave a couple of minutes for questions. So how do we begin? How do we create an ESG strategic plan in our companies, right? Well, there are many ways of doing it. There are, as we saw in this presentation, there's a very complex landscape of standards, criteria, requirements, which are all part of this concept of ESG. This is a step-by-step that we found to be very useful for companies to start to organize an ESG strategic plan. The first step is to be able to define your ESG framework, to carry out a materiality analysis, do industry benchmarking, analyze investor requirements and international guidelines, analyze your internal inputs, right? Many companies have in place risk and opportunities matrix. They may have in place materiality analysis. They may have even a sustainability policy or an environmental plan. So analyze all of this and present to your corporate governance and say, these are the key ESG issues which our company must manage and must report on, right? And once you have identified your ESG company framework, there is also, we need to work on a strategic plan. So we know the issues, we need to know how to improve our performance regarding these issues. It's very useful to carry out workshops with key company areas in order to analyze what are the objectives and have a plan with priority lines of actions. And in order to this, for this to be included in company management, we also work on creating ESG control panels where we analyze the current existing ESG indicators. There are many companies which are already measuring indicators on environment, social, and governance issues. So we analyze what is already existing in the company, and we carry out processes to define what are the key performance indicators and possible targets for ESG issues, right? And once we have an ESG dashboard and we construct indicator worksheets so that this key performance indicators can be robust and they can be verifiable in the near future, we can validate this plan by our top management and begin the process of implementation. And in order to implement, we can say that it's important to have a management structure in place. We need to understand how decision-making will be carried out and create all the communication, the correct, the required company culture and management and governance structures in order to be able to implement this plan and to improve every year in order to reach targets and measure these key performance indicators. So this is a bit of what we prepared for today. Of course, there's a lot of things changing currently in this landscape. We strive to be up to date and to show you a very brief summary of what this landscape looks like. Of course, there are many limitations from the investor perspective. There are very limitations to these existing ratings and guidelines. And some of them include that investors and asset managers may approach ESG factors differently. Not all the ratings are looking at the same criteria, even though as we just revised, many of the same topics arise in all the different standards and criteria that we looked at, but maybe the raters are using specific criteria that is not being used by all. So it's very difficult in the sense for investors to be able to compare the different ratings and get a profound, comprehensive approach to a company, right? So we are also seeing that investors are starting to prefer short and integrated reports to traditional financial reports, and that there's also increased work with consultancies in order to have these strategic plans and to be able to measure and communicate all this information for investors to be able to assess risk and opportunities on ESG issues. So thank you. I think it's just about time. And if we have any comments or questions, Barbara, go ahead.
Thank you very much, Maria. It was super clear. At least for me, it was amazing to keep on digging and getting a little bit more deep in this ESG area. Yes, we do have some questions. Laura and Marta both said excellent presentation. Also, they were both talking and asking a bit more about how. In the end, I think you gave like a little framework about how to start. Can you tell us a little bit more about like also time framework and resources within the funds and the companies that maybe have to be put into the task and the project?
Yes, well, these processes tend to be pretty timely, right? When we're looking at this plan, this ESG action strategic plan that I just presented, this is a process that can take about 6 months in a company in order to understand the framework, create your strategy, and create your control panel with your key performance indicators, metrics, and goals. It takes some time because the idea is to make this participative and to have key company areas participate in this, right? And of course, you need to have your top management on board. So the idea is to have this be a collaborative process. We don't want to have an external consultancy come and say to the company, well, this is what you need to work on. We like to facilitate processes where the company comes up and owns their own strategic ESG plan, and we facilitate on how to implement that plan. We make sure that this plan responds to investor requirements, to international guidelines, so that they can have a plan that responds to all of this that we just looked at. And we also try to make sure that this plan is measured and managed, right? Because one of the key issues is how do we communicate these ESG indicators, right? How can we have clear, robust indicators? So from the other point of view, from the investor point of view, we can provide a very clear information on the company's performance, right? So we are also working on making this integrated or sustainability reports be very clear for investors as well, so that they can easily find the information that they're looking for, right? Because that's also another issue. We work with some companies that maybe have multiple reports, and some of this raters, when they screen companies' performance, they do searches of key terms to see, okay, they talk about human rights, right? Do we have this in this report? So the idea is also to understand the requirements of the information users and be able to provide more consistent and focused information, so that users and investors and raters also can be more effective in providing information and making decisions regarding that company's performance.
Thank you. And Silvia, I asked you a question regarding if you know the inner development goals, a not-for-profit and open source initiative with 5 dimensions and 23 personal skills and qualities required for leaders to address the SDGs. It was started in Stockholm by Stockholm University, and by now it includes more than 100 researchers and many enterprises that are partners.
I'm not very familiar with that initiative, but please do share. I will look more into it. It sounds very interesting.
Thank you. Anyone has any other questions before we close? Maybe a last question. There's a lot of nice messages of thank yous and congratulations. And
yes, we can share the presentation. I see another comment there. So
well, ladies,
send the PDF.
Thank you very much, Maria, for joining us today. Thank you, everybody that was here today as well. This is part of one of our 3 pillars in WeInvest and Emprendedora Lab, to upskill and keep on learning and making knowledge more reachable for investors and entrepreneurs. So we'll keep doing these webinars. And thank you, Maria. I think we will have to do a second edition.
Of course. Thank you, everyone. Thank you for your comments.
We have Marta here. Marta, I don't know if it's our president. I don't know if you want to give some words.
Hello, everyone. Well, it's a pleasure to be you here. Really was amazing and the answer about how I know it's very difficult to put the program in place, but it's amazing when we have in the DNI the ESG strategy. Not only to say thank you, Barbara, for organizing the event. Thank you for all of the people that participate in the event. This is an effort that we have been doing. Here is Silvia Torres Carbonell too, and well, Susana Garcia Robles and the rest of the board team. We are working for many times in this initiative, and it's a pleasure to see how is the impact that we are doing in the ecosystem. And well, of course, thank you very much for all of our sponsors that is very helpful for us, because if not, it's impossible without any money. It's impossible to I don't know, do the execution of all the things that you are planning to do for next year, and all the things that we have been doing in the past. Thank you very much.
Thank you, everyone. We'll see you next week with the training sessions. So
bye.
Thank you.
Thank you, Sol, also.
Great. Bye-bye.
Gracias, Silvia.